With thefinancialbulls.com with a bi-weekly or 3-week recap of the market action with some setups for the coming weeks. So right here is a daily chart of the S&P, and right here is a 10-day chart for the S&P 500. So as you can see, the market got destroyed yesterday. Well, let me just start from the prior action from the prior video. So we were around here. I remember in the last video. So we came down a bit, normal pullback, and then now we were grinding higher, back to highs. But the interesting thing that happened was there was sort of a red dot reversal. I mean, this day right here, Monday, we penetrated through the previous day's high, but we couldn't finish below it, and then we closed on the lows. That was right here. To me, that was some cause for concern. As you can see, that pivot point over at 2,105 was penetrated. Next day, we kind of came back above it, and then we just rolled over ever since then. And as you can see right here, 30 points down, 1.5%. So stocks got destroyed yesterday, and it's the morning, so that's what I'm saying yesterday. So right now, if I were to trade off this, definitely short. And usually I don't want to short into the sell-off. I like to think that I'd be shorting up here, and I think my strategy actually would be tailored to shorting up around here. So in the meantime, I really see no longs. I really see no potential setups, just because when stocks sell off this hard, this quickly, they're basically the sell setups that occurred happened 2 days ago, and now they're overextended, and there are just no stocks that are coming up off of oversold territory. So this is really not my market. But if you want to trade at the momentum and short some, then that's not a bad idea either. Or if you want to buy it, if you think it's a buyable pullback and it's just a short-term retracement, that's a good idea. So really, I'm neutral right now because of my strategy, but I can understand why someone would be long or short. But this is just an ugly bar, so I'd actually have more of a preference to be short than long. But I really have no idea on the short-term direction. I have short-term direction. I have kind of like a 5-day opinion on where a few stocks will go. But on the entire market as a whole, I have no clue. But if you want to trade the trend, not a bad idea either. Some notable sectors, the biotechs. Look at that, down 4%. That move is just vicious. You had the big gap up. Stock went from 374 down to 365. That was your warning signal. That's exhaustion. And then you just have the stock just puked. That's disgusting. You haven't seen a sell-off that hard that occurred that quickly in, I don't know, maybe a year. Yeah, it's a pretty steep sell-off. And those are the types of sell-offs that I like to capture too, because you have this nice uptrend, which is a lot of buying. So when you actually do have that meaningful sell-off, that's a really nice opportunity to make some money. This kind of sell-off would not have happened if the stock were just trading in a range. So the biotechs, you can look at that right there. That was the warning signal. I'm telling you, a bunch of people got short. A lot of the smart money got short then. Some stocks that I was looking at the past few weeks, it was Iron Mountain. This stock worked out okay. We saw it over here. So you saw steady volume, nice bottoming tail, and then it went from 35 all the way to 37. It's really done nothing since then. And as you can see, it did the same exact thing that the market did. SEM was another stock. Saw it right here. Broke below the previous day's low. Had a nice rally above it. And then it continued higher. It went from 1281 on the close all the way to 1371 in a matter of a few days. So that was a good pick. And from the short side, I was looking at JetBlue. It was just a little pullback right here. I was looking at February 24th. This was your day, and then I had a 2-day retracement. But nothing much since then. Another stock that, I don't know, that's it for stocks that I looked at. Only 3 plays today. Not many opportunities, just because the market is just influencing every type of stock. And as you can see, most stocks are influenced by the market, obviously, but when the market has this drastic of a move, it really makes sure that all the stocks are acting the way it wants to act. And what I mean by that is most stocks are selling off. You can look at everything from a Google to an Apple to, look at these bars here. down 2%. Exxon, let's take a look at that. Oh wow, Exxon held up nicely. I guess it's because of the oil. Facebook, let's see what that did. Yeah, 2.8%. So a lot of these stocks are just left for dead. But the ones that I'm looking at, JMEI, this stock right here, I feel like this is a really nice setup. Down 4% today, so you'd be selling into that. But look at the run it's had. This is why it's caught my attention. From 1276 all the way to 1731. So that's a really nice run up. I mean, that's really, I wouldn't say overbought because stocks can go up forever, but that's a nice run that I'd be looking to sell into just because that type of move from 1266 to 17 and change is not sustainable. So what you had is a penetration through the previous day's high, and then it just couldn't hold below it, couldn't hold above that. So here's the 10-day chart. As you can see, this is kind of a change in the chart. You have some nice volume down here. There's a lot of red bars that you don't see over here. So in a simple way, I'm kind of describing how something is changing in this short-term uptrend. So I'd be a seller into that. Also, another stock, Cigna. I was watching that. So this stock obviously has had a beautiful uptrend from 108 to 126. Big cap stock. But what you can see right here is the stock traded above this. It's been trading in a range, traded above that previous high at 130.12 today, and then it just followed the market and just got hammered. So basically, something has changed. Now it's not all buying and consolidation. Now it's actual selling. So the stock's rolling over, in my opinion. And given that it couldn't hold above these key levels that it should have held if it were going to be a strong stock, then I'd be selling into this. And on top of that, I'm also trying to incorporate a little bit of fundamentals into my analysis. It doesn't hurt. And I found this interesting. This right here is a valuation chart for Cigna. So what I like to look at is price to earnings. I know it's pretty boring. It's a typical valuation tool. And as you can notice right here, and if you don't know what price to earnings is, sorry about that. It's basically what multiple investors are willing to pay for a dollar of earnings in the company. So if I'm a stock and I'm trading at $10 and I make $1, my PE multiple is 10. It's pretty simple. And different industries, different stocks tend to have different multiples. So high tech, high growth stocks have really high multiples typically. But if you're a big cap consumer discretionary stock, then you're usually trade at a pretty low multiple, around the average of the S&P 500, which is around 15 to 20. So right now, Cigna this is what catches my attention. This is what caught my attention. Sorry, I can't speak English right now. 16.2. So it's trading at 16.2 earnings times earnings, and that number doesn't really say anything. But then when you compare it to the 5-year average at around 11, that shows you that short term the stock it's stretched in valuation terms. So I feel like this is the beginning of probably a larger sell-off that I'd be willing to sell into. Not technically, but based on the previous market action and also on valuation, it's very stretched. And the only stock, I can't think of any, there are no stocks. I took a while to look through stocks to play on the long side, but I really can't. Yesterday, or the day before, I saw Yoku, and I saw it on this day right here, where it was a nice bottoming tail after a sell-off from 16 down to 13, and there was some really nice support around here, buying action, not actual support and resistance, but just buying support. And it held up today. It was up 1%. It was up 1% yesterday. So this was a nice play, but that was 2 days ago. But really, as of right now, just because of the velocity of this fall, there have been no good long setups, just because no stocks are really up on volume. There are a few, but they're either in the middle of an uptrend, they're not really after a steep oversold sell-off, which I really like. So right now, you could make it just as good of an argument for a bearish case as a bullish case. I would side toward my short cases like Cigna. I'd be very comfortable selling into that uptrend. And being a contrarian here, I think that's what pays. But overall, gotta find your plays. Some people are probably trading Google. or Facebook. Actually, you could probably short into that, or you could be buying it. Either way. But I know I'm bouncing around a lot here, but it's just this is such an uncertain market where anything could happen. So volatile, and I have no clue if the sell-off will continue or if it'll stop. So good luck trying to predict that. If I were you, I'd just stay with selling overbought stocks and buying oversold stocks. And right now, the market has not given a clear oversold or overbought signal, so therefore I'm neutral. So thanks for watching, and happy trading.